I've learned the hard way over the long term that more often than not, the easy money was already made by the early investors. And this really is a game of musical chairs. And as a retail person, you're not going to win.
Imagine a country where the banks are genuinely terrible. You had a handful of big banks that controlled almost everything. They charged absurd fees. They made you queue for hours behind security doors.
Welcome to the world where the venomous snakes gobble up most of your gains.
This could be, the world's most valuable company in the next couple of years.
For an advertising-free version of this show, check out wallstreetwildlife.com.
Welcome to the Deep Investing Jungle with your hosts Luke, the Badger Hallard, and Krzysztof, the Monkey Piekarski. This week on the show, we're continuing our King of the Jungle portfolio review. We've got a bull and bear debate on hopefully another 4 companies today if we have time. Monkey's going to update us on Sphere, plus his new King of the Jungle holding Merlin Incorporated. And I'll be looking at 2 of my struggling stocks, Novo Nordisk and Nubank. Plus, this week is SpaceX IPO week. What's your plan?
Badge, happy SpaceX IPO week.
Do we do like a celebration? I have no idea.
I don't know. It depends on where you are with that investment, but it's kind of a really big deal, right? I mean, these kinds of events don't happen very often. In fact, it's been quite a while since this level of hoopla has been palpable because markets are kind of revolving around this thing. So I can't wait to talk to you about it, especially all the complexities on your end, because it's not exactly straightforward for you. But more importantly is that you're alive.
Yeah, I'm out the other side of what was a cough and a cold and turned into something called pleurisy, which was pretty awful, but now mostly recovered.
Yeah, I was warned not to be too terrified because Mama Badger allegedly listens to the show, and I was supposed to look at your bleary eyes and just smile and not even raise any worries. But you are officially well. You
played tennis this morning. I only lost like 7-5, so I actually held my own in the game, even though I got no lung capacity is like way down. But yeah, I'm mostly back.
Right on. Did you ever get a chance to watch the Rafa documentary?
I did not. No.
Oh, you got to get on that. It'll be inspiring to your tennis game.
It's just like there's such a huge number of incredible horror movies and horror TV shows that I'm consuming all my time right now.
Oh, well, in some ways, the Rafa documentary is a horror film in and of itself. Once you realize what he did to himself to do what he did, it's otherworldly. All right, Badge. I've been thinking a lot about the SpaceX IPO, and I suspect we actually have very different results or approaches with how we're going to handle this. Maybe let's start at the very beginning. I was scrolling through the interwebs, and I came across what I thought was a interesting chart in which some user, Mariu Scober, kind of did one of these market structure charts that maps out ahead of time the alleged psychology of the market, and if past is prologue, then here's what we might expect the SpaceX IPO to look like. And if you're watching us on the YouTubes, one plausible way forward is that there's all this hype built into it. And so what we're going to see initially is this major lift in price above the IPO pricing. And then once some sort of reality sets in, once retail enters at the high, you're going to see the hype kind of unwind. And then it's going to bottom out for some period of time. Here on the chart, our user says 1 to 4 years of sort of sideways. And then once valuation resets or fundamentals catch up, then you're going to return to some sort of exponential convexity in which the large institutions buy a lot, therefore taking it above IPO prices. What do you think of this chart?
Yes, definitely plausible. Like I can think of like 10 completely different shapes, all equally plausible paths for the stock and the stock market as a whole. But no argument, like this is one way it could well play out.
Okay. So with the first question I have for you specifically, I was wondering about this is I did no research whatsoever and have no understanding whatsoever about the difference or what happens when you were an owner in a private company and then the stock goes public and how you personally are thinking through this. So what's going on in Badger's world?
Yeah, so I've got like a chunk at a $240 billion valuation, all taxable, which I hate because like all my investments are completely tax free.
Welcome to whatever non-Badger land is. Welcome to the world where the venomous snakes eat like gobble up most of your gains.
You got it. Yeah, not pretty.
Although, which incidentally, that photo you sent me from your trail run with the badger that had seen better days on the side, maybe that was the tax serpent as a sort of forewarning. Anyway, go on.
Yeah, but I mean, in context of that, like it was the first time I literally got out of the house in about 2.5 weeks. Went for a walk, not even a run, because I could barely handle like a walk. And the very first thing I see is like a dead badger by the side of the trail. So I'm like, oh, this is not a good omen. This is either me or my stocks that are dying here. Yeah. Anyway, it's not SpaceX because my SpaceX position is like deep in the money at the IPO valuation. And even on Marius Schober's chart of like plausibly the stock could bottom like 50% below IPO price. I think that is plausible. Even then I'm deep in the money. So I think my equity is safe. But I'm in a lockup period. It's all very informal. I've only had like emails, no contracts or anything. I'm in a lockup period for 6 months, which is probably means that most early stage investors will feel the same. And my particular SPV has confirmed that it's going to convert to cash. So at the 18-month point, sorry, the 6-month point. Did I say 18 months or 6 months? 6 months. 6 months. Yeah. At the 6-month point, the SPV holder, the GP, has confirmed they're going to sell the stock, realize cash, and then just pay out cash to holders. So I've got, I guess in theory, I've got like exposure to SpaceX, which if I were to sort of translate that into my regular portfolio today, it's about a 3% position. So that's like relatively material. But I know that's going to turn into cash or will no longer be SpaceX stock, and I have no control over that.
So wait, if I could ask for clarity, that's the thing. The structure forces private owners to convert to cash no matter what. You have no say in that. And therefore, if you want to be an owner again, you basically have to buy on the public markets. Is that correct?
That's correct in this case. It's not always the case. Like the general partner may have said, we're going to convert to stock, we're going to issue stock, like give us your brokerage account and we'll transfer it in. But in this case, they said they're going to sell it. They might change their mind, but the key thing there is I had no control whatsoever. Stuff happens and then hopefully I get something, stock or cash. In this case, probably cash.
Okay, so right, that raises the more interesting point for us is given that inevitability, are you planning on becoming or remaining a SpaceX shareholder, and what's your actual plan of action, do you think, for IPO day or IPO? It's IPO on Friday, right? The 12th? So,
yeah.
Right? So IPO day, I guess it's not IPO week exactly. But in the days following IPO, what are you thinking?
Yeah, I've got a strategy. I want to replace that sort of virtual position with a real stock position. I want to be long SpaceX. So I've put in a bid for what would equate to about 0.5%, 1% position across, and I've sort of duplicated that bid across a couple of different brokerages because my ISA is sort of spread out over a few different institutions. And I'm not expecting it to fill. I'm expecting to get like a fraction of what I asked for. So I might end up with, I don't know, few hundred shares. God knows like how it actually works out. But my plan is to build, because I know I'm essentially going to treat like the paper gains as just cash. I'm not going to consider that a SpaceX stock anymore because I know it's not going to be stock in the future. So I'm just going to build up to slowly over probably a year from this Friday, directionally like a 4 to 5% version. So my plan is to do that probably in 5 or 6 tranches just to like mitigate the volatility.
Okay, so you're going to be long-term investing in this thing. You're pretty much, if what I'm hearing is you're going to do what you always do, which is the marathon style, right? The you want to own a company, you're not interested in the hype. Exactly, you're not going to be swayed by it. You're going to plan out the buys over time and for the long duration.
Because there is like, let's just sort of talk about it. I haven't got like a pretty picture. There is a plausible situation. I'm not investing in the expectation this will happen. But I think probably Marius's chart is probably more likely. But there is a plausible situation where the stock pops after IPO and then maybe meanders a bit. But if people kind of buy into the SpaceX vision, like the 10-year vision, in the same way they have bought into the Tesla 10-year vision. And, you know, it's all about now really the SpaceX, like data centers in orbit. And already we've seen big deals with Anthropic and Alphabet to buy like $1 billion a month, essentially, and in data center capacity. Well, I mean, if you buy that, then stocks just go up, right? And then at some point, like this is like a hyperscaler alongside all the others, like a long time out, but potentially without the regulatory and the complexity of like sourcing power. They got like a ton of engineering problems to solve, no doubt, but I don't doubt Musk's ability and his team's ability to do that. You know, this could be, you know, the world's most valuable company in the next couple of years.
Oh, that's so interesting. You say that because you want to hear my plan? It's at the moment, it's coming more from intuition than anything like deeply considered. Though hearing this little pitch of yours is making me in. But curiously, I don't want to own this company. And I'm trying to think like why, like what's leading to this feeling. In part at the moment, I'm just sour on Musk. It's just a feeling, right? The fact that, I don't know, here's one data point, right? The fact that I have a Tesla with full FSD, but it's not being retrofitted, even though that was the promise, yada, yada, right? Okay. 2, I'm obviously a AST bull, and so I have a bias technologically against the satellite business of Starlink. And then, as we talked about on the Drowsy Bear podcast, I guess I still believe in the law of large numbers, even though that's being challenged. And I have a sense that the hype here will have generally extended the valuation beyond what's reasonable, and that might last for a while. So I'm sort of saying I'm going to ignore what happened in NVIDIA, and instead, I think what I'm going to try to do is actually swing trade this and use my fancy charts and levels to get in and probably get out way sooner than any long-term investor would reasonably want to do. And my actual game plan is not yet established. I have to do that this week. But I will, of course, use options to try to play with the momentum until it breaks.
I think that's reasonable. Look, that is in your skill set and that is your approach. And like no argument, this is going to be wildly volatile. So I guess like volatile stuff is the domain of the expert technical trader.
Yeah, and I guess the only question I haven't yet resolved for myself is we have a distorted view of reality as professional investors, and we swim in the markets all the time. So to us, this is like SpaceX IPO week. Sure. I really wonder or have no sense of what the quote unquote average chimp out in the, streets is thinking or not thinking about this. Like, when is the hype around this IPO legitimately going to be known to mom and pop and grandma? Is it going to be this week? Or is it going to be next week? Or is it going to be still some weeks after?
Probably a way out, right? Like if you are an investor, you have certainly heard of this. And when I look at my brokerages, like it's all over. Like the front pages of most of them, like sign up and, apply for an IPO allocation. But if you're not really an investor, or, you've got like your retirement account and it's just like on autopilot, probably haven't paid too much attention to this.
Yeah, curious. Just as we're recording, I had a little bit of a thought. I wonder if it would be useful for any of our patrons, useful or interesting rather, if I were to document my trades around SpaceX in, I don't know if it would be its own channel, potentially, available for Dolphin tier patrons, or whether that would be a little too, in order to demonstrate how I'm using options to handle this.
I don't think it needs like its own channel, but we've got the Dolphin trade channel where, we both share in real time everything we're actually doing. So you've got the perfect vehicle there. And if, all you're talking about is SpaceX for a couple of weeks, then so be it. I think that's still really interesting.
Okay, interesting. Yeah, because I don't know, in moments like this, usually I would say I don't want anything to do with an IPO. I've learned the hard way over the long term that more often than not, the easy money was already made by the early investors. And this really is a game of musical chairs. And as a retail person, you're not going to win. That's that's my assumed narrative. And yet this feels really legitimately different. I mean, it is space, this, it's all these confluences of AI and Musk and rockets and all of it, right? I think this has more legs. But still, it's sort of a little bit of an experiment, right? I don't feel confident that I can necessarily win, but the way I try to win might be an interesting experiment / learning experience for our members. So let us know if you want me to really legitimately document what I'm going to do.
I'd like you to do that. So yeah, if all of your plausible scenarios and your views are that it's probably going to go up after the IPO, like using very basic language, you probably want to put a bid in for like some IPO stock, because why not? And then that will just be stock on Monday morning in your brokerage account. And if you immediately put some fancy option thing on it, nothing stopping you doing that. Just to jump in with your main point though, I'm kind of with you. Like I've never actually bought an IPO before or made an offer for an IPO. And I wouldn't now, other than I kind of on paper, I own stock and I'm deeply in the money. So even if the stock IPOs and goes down by half, I'm still in the money. Essentially, this is I'm a shareholder at $240 billion. So that's kind of my thinking with this IPO. I just want to get my foot in the door with a real share position as soon as possible to start to replicate that thing we have from a couple of years ago.
Right on. One way or another, it won't be boring.
Yeah, for
yeah. It will not be boring. I'm going to be cautiously optimistic here. I think this will end up having the attention of the whole world. I mean, it's not every day what the company IPOs is immediately one of the world's most valuable, especially with the actors involved and the stakes involved. So, I already have some option strategies in mind. So stay tuned. Stay tuned to the Dolphin trading channel. If that's confusing to you, by the way, and you're watching this on the YouTubes or listen to us on the Spotify, check out patreon.com/Wall Street Wildlife, where you can follow our community and all our discussions and trades.
Also at wallstreetwildlife.com. It forgets that we own our own domain.
Oh, awesome. Yeah, so see, we are professionals like that.
All right. Do you want to tell us about an actual stock that is actually in the public markets today?
Yes, Badge. Just on Friday, Monkey made a new King of the Jungle portfolio purchase. It was a little bit of an impulse purchase, but I'll return to that. So let me tell you about a company called Merlin. Merlin is an aerospace and defense technology company that is building Merlin Pilot, which is an autonomy system for fixed-wing aircraft. The company wants to combine hardware installation, software installation, certification work, and later fleet development deployment for military and civilian aircraft. So today, this is still a tiny pre-revenue, basically, public company, but the investment case is really about the proof and safety and certification and defense adoption and whether legitimately autonomy can move from these tests and flights into funded aircraft programs. So, should you invest in Merlin, ticker MRLN, and follow Monkey's little bit of an impulsive buy on Friday? Right now, I'd be cautiously bullish because while interesting, these shares are no longer cheap. So what is it that's really happening here? Just on Friday, the U.S. Special Operations Unit, fancy acronym USSOCOM, basically cleared the critical design review hurdle and said that their designs, Merlin's autonomous flying designs, are ready now to legitimately be implemented and integrated into these fancy planes and tested for real. Now, this has already been happening, right, for a long time, but there's stages with these things, Badge, and these things take years. So this final CDR, for short, that was cleared basically says the U.S. Defense Department is serious, that this is the platform they want to try to integrate into their planes. So that's kind of the real base case, and the stock jumped like close to 30% at one moment on what was on Friday, one of the largest red days in the last while. So the buying pressure was very, very substantial. This is not, by the way, just a casual little blip company. I'm again framing this as the United States of America Defense Department. So like with the FAA and all the regulatory hurdles, like to have met this hurdle, it's a very big win. The second bit to this is, of course, to the bull case, is that if it's good enough for the United States Department of Defense, then eventually this autonomous program will find its way to different use cases, some of which include just flying planes that basically ship cargo without passengers across the world. I mean, that market is huge. And then, of course, if it works, if it's good enough for that, eventually it's going to make its way towards civilian planes. And let me say out front, Badge, in plain speak, and this is where I think this conversation is going to get interesting on the more layperson's level. I know I'm going to catch a lot of flack for this from some of our patrons, one specifically I have in mind, which is that I have a layperson's perhaps ignorant vision or view that autonomous flying is somehow an easier problem to solve than autonomous driving. And I welcome to be corrected. But the reason I think this at the start is to solve the driving issues we know for cars that Tesla is in Waymo seemingly already solving, you and I know from lived experience that the variables that happen in that last, call it 99th, that last percent of edge cases are like infinite. Like badgers running across the road, bicyclists, snowstorm. I mean, all these crazy things, right? And we seem to have figured that out, or about to figure it out, right? Whereas when I think of autonomous flying, I legitimately think that with all that space up there, literally, and all the regulations in place to ensure that these airplanes are respecting their boundaries, and to me, it feels like an easier problem to solve, not easy. And I want to be very clear about this. If this were easy, then some of these big corporate logos that are actually hiring Merlin, I didn't say this yet, but they said we can't build this ourselves. We need to actually hire Merlin to do it for us. So we know the difficulty is high, but I somehow think it's easier than the car stuff. Therefore, that this is really a question not of if, but when. And therefore, if Merlin, this tiny company, has this lead, that they're in the pole position, it's theirs to lose, and that now it's really about execution. So the last thing to answer my own question, should you invest in this badge at this moment? Look, the bear case is very obvious, and it's primarily financial. They have no revenue. It's basically $1 million. They have a bunch of promises for potential contracts from the military, up to $105 million in contracts, but it's a very loose structure that's basically gives the military a bunch of like, if you do this and if you do that, then we'd buy or potentially buy more of your product, but nothing is guaranteed at this moment. And so you are paying right now technically like 200x for current revenue. And even if you put some forward assumptions into it, it's still expensive because it's based on execution. So the stock under no conditions is cheap right now. So the deciding question really, should you invest in this now, is can Merlin convert all these program milestones into money that's coming in so that the investor is not diluted at really high levels. Last thing I want to say before turning it over to you, what I love about this moment and why I think I pressed the buy button on Friday is you have a little bit of the, I want to say intuitive surgical model, which seems weird to say, but this is a little bit of the blades and recurring revenue model. Up front, what ends up happening here, Badge, is let's say the company, an airline company, to keep it plain, says, okay, we believe your software can help us fly our planes autonomously. We will pay you, I believe it was $20 million or $10 million, I forget exactly, per plane to install it. So that's money up front. But then it turns into a recurring cost for the company, so that once the installation is done, the fleet grows and the revenue base becomes reliable over many years. And so that there's the sort of, I'm calling it blades. Maybe that's the wrong analogy exactly, but software as a service, maybe that's more accurate. And so why did I press the buy button hesitantly or with caution? It's because I think with some money coming in per installation, per aircraft, and $180 on the balance sheet as of the recent financial dilution, that they have enough of a runway to prevent further dilution, and then the market will be forward-looking and see, oh, okay, enough of the revenues coming in, they have enough cash on hand, the revenue will eventually be recurring, it'll be forward-thinking, and then the TAM is actually enormous. But it's purely an execution story.
Is this really a problem? Right. So you half pitched like two different use cases, one for the military, one for like cargo, commercial stuff. I don't know much about this sector, but if we compare it to, say, an autonomous car, like if you have like an Uber or a Waymo driving around, like the capex on the car is, I don't know, $20,000. Waymo have just got it way down. The cost of the fuel is like marginal because it's now like charge the thing up as electricity. The cost of the driver is really material in that paradigm. Like it's overwhelmingly the largest cost. If you're flying an airline, the cost of the fuel is freaking enormous, I imagine. The cost of the capex of the plane is, I guess, tens of millions, I suppose. I don't really know, but a lot. The cost of like a crew for a cargo plane, I don't know, but it's like 2 or 3 people. Maybe their salary is, I don't know, $100,000 a year or something. A couple hundred, even if the total crew cost is like $1 million a year, and they're flying, and they can only, you get more use on you might need like 2 crews, so you can really work the capex, $2 million a year on people to fully utilize like an aircraft, maybe 3. That's still in my sort of noddy, explain like I'm 5 head. That's pretty small proportion of the overall cost. So yeah, my original statement, is this really a problem that's worth solving?
Yeah, I believe, and this is where, by the way, I'm at the very beginning of my actual investment journey, literally as of Friday. But I've been following the stock for months, and it was not until this latest hurdle was successfully concluded that I said, okay, now there's enough proof here. But I do believe, counter to your assumptions, that the TAM is much bigger than you think, because I do think that human costs are much bigger than you think. And part of it, I believe, you're talking about very sophisticated, special kinds of airplanes, both for military use cases and the cargo stuff, that do require people at a higher pay grade than we're used to thinking of on commercial air flight. And also, I think this is getting a little bit sci-fi-ish, but I think this is quite adjacent to what we're seeing with the drones. Like that, as soon as the military can fly planes that are call it human-free, professional pilots of the highest military stature, they're not cheap. Not only in terms of cost of life, but you're talking about the best of the best. And that gets automated in some ways, like a drone might. So I think the cost and savings, when you add up the different kinds of airplanes that would get automated, is much higher than you think. Otherwise, and again, I'm still learning about this, otherwise, the military would not have invested as much time and energy into building it for themselves as they have. As a business person, right? This is a market these guys are going after because of the potential, and it's not to save a few dollars.
So totally different pushback from me. Is this not solved already? Again, I'm not a pilot, but you've got like autopilot for decades now. Auto land is now a thing. So, really in a commercial jet with like passengers, the flight crew are there. Forgive me if this is incorrect, Stephen, our Patreon, who I'm sure is the one you're sort of, wary of this pushback. And I imagine the flight crew are there as like backup and contingency. And they probably, when they do land, it's probably to get their own experience up and training and flight hours so that, they're qualified for really complex situations. But I imagine the large majority of flight miles don't require humans. And if you go to the other end of the spectrum, like military, like say, surveillance, drones and long range attack stuff. Again, I'm not a military guy, like there are no humans in those planes today. Like they're largely automated, or there's like some telecommunications platform and like a human in a, highly qualified human sat in a bunker somewhere in North America, like remote piloting the thing. So where does Merlin really come in if this stuff exists already?
Yeah, I think this is why on the last call, the CEO basically said there's a big gap between mostly autonomous and fully autonomous.
Sure.
And this is why, as Tesla was saying for a long time, it's sure you could figure out 99.5%. That's the easy part, but it's the last 1% that is the whole problem.
Sure.
I think this is the same issue here. And this is why it's interesting. I know I'm going to get pushback. I know Steven he already said on Patreon, right, that this is a much harder problem than you think. That's not what I'm denying. I think I wonder, like, as AI starts coming for all human jobs, I wonder if some of the pushback from someone like Steven, who is a pilot, is of course he's dedicated his whole life to learning this incredibly complex, challenging thing, right? Where it is the edge cases where you're thinking about all the time. But the thing that's startling to us as humans is like, my God, what if a company can legitimately solve even the edge cases on something as complicated as defense flights and cargo flights and eventually commercial flights where, like in cars and robo-taxis, you will need zero humans. And in fact, it'll be safer somehow if there are no humans. Like, that's the thing, right? If we go back to the Tesla example, that's the thing that's kind of shocking to us, or the robo-taxi, right? They're building them without any steering wheel, right? For any human driver, you're like, that's crazy. But we had that Zoom ride, right, in Vegas where we were like, wow, it felt safe. It was safe. We think. We didn't die, right? But to make that leap as a paradigm, I get why there's this like, no, you're crazy to even try this. But to go back to my original bull case, instinctively as a layperson, it feels autonomous flying is more ripe for this kind of disruption than driving is, and that the cost savings will be way bigger if they could pull this off than we think.
Fair enough. Decent pitch for it. Like, no argument really. I'm not pushing back from any like base of knowledge. Just instinctively, it feels like a strange business problem to go after.
All right. So here's what I could I could promise to our listeners, and this is a little bit of portfolio management. I was having a little bit of buyer's regret a little bit on Friday because to go back to what I said earlier, the stock's up 25% on a massive red day. I was waiting, I was watching, I was learning about this for months. And then I'm like, but I went into the stock at about a 1% position in the King of the Jungle, which right now was about $150. I think it was like 15 shares at $8.80 was my entrance price. But this is how I like doing things. I have a decent knowledge base from which to now examine the company with real money, right? A 1% position, one way or another, is not going to destroy me if it goes to zero. So I'm not concerned about that. But I have all the motivation now in the world to really pay attention to many of the nuances and all of the checkpoints and all of the execution milestones, right? And to me, to better answer your question, I bet next time we speak about this, I'm going to be able to tell you much more clearly about to what extent you're right or wrong about the size of the problem they're trying to solve.
Nothing like having skin in the game to motivate proper research.
Exactly. So I hope that was a decent beginner's overview. I had so much more to say, but as it tends to happen, right? We sort of, or maybe for the better, right? It sort of floated off into the sort of holistic view, but believe me, I'm going to be back with many more acronyms and explanations as the months unfold.
Should I tell you about a bit more of a straightforward company I'm invested in?
Yes, tell us about what we're to think in the fintech world, given what's happened with Wise, and
Yeah.
tell us if there's a connection
by
here.
the way, actually, before I
Yes.
get on to Nubank, I think it's probably worth just touching on what I've done since we spoke last week with Wise. So I wrote a article. I think actually our podcast discussion was pretty good, but maybe like it was me like straight off the cuff, just riffing and a bit ill about like what I'd read a few hours prior, and I was flapping maybe a bit about the long term validity or relevance of their business model, which is to actually eliminate the money transfer. And when I really gave myself like some space to think about it properly, actually, what like Wise's model is good and arguably better than the correspondent banking model because they see the whole end-to-end payment flow. And so, like plus point, if they can get this sorted, the problem, if you didn't catch last week's episode, was they've been dinged for anti-money laundering in Europe on the back of their sponsoring bank in the US getting hit for pretty much the same thing in the US. But I have sold all of my Wise stock, and I announced that on the Dolphin Trading channel before I hit the sell button last week. And the reason for that is, even though the model's good, I'm highly confident that they are going to get investigated by the FCA in the home market of the UK. And the FCA have got real teeth. And there's sort of two concerns that come out of that. Like one is, it's very unlikely that the FCA could essentially pull their access to financial systems. I doubt that happens. But the FCA can create a real pain for them in terms of doing what's called a look back. Like they might have to go back and reanalyze years of individual transactions to look for these AML failings that they've identified. And that could be thousands of people having to do that manually. I'm sure they'll have a lot of information and AI and stuff around it.
Hey, Badge, is Monkey at risk of getting his banana imports flagged?
Do you mean is your Wise account itself as a customer in any jeopardy?
Well, Monkey has a banana habit. He knows a couple guys, and there's been am I going to have people looking at my banana imports for legality all of a sudden?
Yeah, possibly. But I'm assuming you haven't been money laundering Wiki Bananas, so you're safe. And that is interesting, actually. So we had some friends in town for Katrina's birthday weekend, and one of my friends was asking, she's an investor in Sphere, which is why I'm keen to chat to you about Sphere, if not today, next week. But she's also was asking about Wise, and we were chatting about that, because she's a Wise customer. And when I explained the AML thing, her initial reaction was should I withdraw my money? Is the bank in trouble? And that's quite interesting. The answer is no. The bank is not in trouble. If you're a business or a personal customer, your funds are safe. You'll transact, nothing's going to, barring some absolutely insane outcome, nothing's going to go wrong with the bank. There's not going to be a run on the bank. Your deposits are safe and they're perfectly fine to bank with. They have a problem because they need to convince the regulator that they found all of the deficiencies and resolved them. And they've looked back and have identified historical anti-money laundering failures. Sorry, this is supposed to be a sidebar. It's turned into a whole thing.
Mm-hmm.
But our friends put feedback on her sort of initial instinct of, is my money safe? If a lot of customers read the headlines, because it has made the national news, they read the headlines and they get worried they're going to withdraw money. That in itself, even though it's an incorrect thing to worry about, that in itself could create problems for Wise. They could lose a ton of customer deposits, I suppose. But that's not why I sold. I sold just because the headache, the cost, the complexity, the distraction, and it's going to be 2 to 3 years to get through this period. So just too hard par for me right now. But I would definitely come back and look at it as an investment again once they get past this point.
Okay, thanks for that clarity, Badge. All right. And as a point of clarification, Monkey does not use his bananas to launder anything. He uses his bananas to eat because that's what bananas are for.
I say perfectly legitimate use of funds. Yeah.
All right. So tell us about stock ticker NU, Nubank.
Yeah, Nubank. Right. I mean, if you know nothing about Nubank, let me just tell you who they are and what they do. Imagine a country where the banks are genuinely terrible. Like Brazil, 10 years ago, you had a handful of big banks that controlled almost everything. They charged absurd fees. They made you queue for hours behind security doors. You got almost no interest on your savings. And most people got rejected for products like credit cards. So if you were poor or young or lived in the wrong neighborhood, like the wrong demographic, basically you're unbanked. The banking system didn't want you. And then a bunch of time ago, a Colombian entrepreneur called David Velez came along. He experienced these problems himself in Sao Paulo, found it so humiliating and bureaucratic. He's like, screw this, I'm going to build my own bank. And so he founded in 2013 Nubank. No branches, no fees, no paperwork. You sign up on your phone in a couple of minutes, and then a week or two later, you get like a purple card in the post, and you're banked, and that's it. Right. And we're kind of used to that in the developed world. That's how Wise works, and that's how like a whole bunch of other banks work. But this wasn't how it was in like many big Latin American markets, mostly Brazil, like a while ago. And this model worked beyond everyone's expectations. They've now got 135 million customers, which is more than half of all the adults in Brazil. It's now expanded into Mexico, and they are the third largest financial institution in Mexico. Colombia have got, they're banking in Colombia, and they've just been granted conditional approval to launch into the US. But let that quick caveat on that, and I'll come back to that. So it's just a bank. Like the way they work is the same as any other bank. It's just cheaper. People deposit money. They earn interest. Nubank pays very little for that money they have on deposit. They lend it out through credit cards, personal loans, installment plans, and they kind of keep the margin, keep the difference. But because it's software, there's no branches, hardly any staff per customer. The costs are a fraction of their legacy competitors in these markets. And just to put it in perspective, like an old style Brazilian bank spends about 40 to 50 cents to operate the business for every dollar of revenue. Nubank spends about 17 cents. So like that cost gap, that margin improvement, that's the whole of the business. That's Nubank.
Okay, so I guess I have two questions. I mean, sometimes when you hear a narrative like that, it's like, guy sees a problem in Brazil and then goes off and solves it. Well, I mean, I don't know, is banking, as we're finding out with Wise, and I don't know if this is an accurate comparison, but he coded a bunch of stuff, right? He coded a bank. That's the business model, right? So is you're saying it's just a bank, or it's simply a bank, or there's, but it's also simply a bank because it's a software solution. So I guess point one is, if he did it so easily, might somebody else do it so easily? And are we talking about, is the complexity of the solution somehow the moat, or the simplicity of the solution? Or how concerned should we be that it's just software?
Yeah, I mean, it's not just software. Like a bank is complex, and it has to have like licenses, which are hard to obtain. And it has to have huge volumes of customer deposits, which you've got to like seed in some way. So you can't just write, you can't vibe code a bank in the weekend with Claude code. It's a lot more complex than that. Sure, there could be competitors, and that would be a good thing for these markets to have, other neobanks. And arguably, Mercado Libre with Mercado Pago, like their sort of payment fintech arm, that is kind of competing in a way with aspects of Nubank. Like you can get like a Mercado Pago credit card, I believe. But they're just embedded now. Like the legacy competitors can't compete. well because their cost base is so high, because they have all the bricks
Sure.
and mortar and the legacy. And they've, as a neobank, they're highly efficient, and if you compare them to neobanks in the developed world, like they're still up there in terms of their efficiency and how smoothly they operate. So it's not like someone can come and like wreck the model, and they got half of all adults, right? So, they're very embedded.
Well, this is the curious thing. In some ways, this makes sense why this is a Badger stock. But in other ways, I wonder because, with my background in Chainlink, I'm always thinking like, okay, if there's one thing we know is like that humans and banks and the truth of what any bank or financial company claims is often can be very, very different from a blockchain guaranteed truth, which is why the financial world is moving to blockchain. But then I layer on top of that a country like Brazil. And if I'm trying to be a non-risk or mostly risk averse investor, I totally buy the bullish story the way you outlined it. But my God, I can't sleep at night knowing like that I legitimately do not know anything that's truly happening underneath on the ledger books in a country that's known for corruption or has, or God only knows, right? So one day, wake up to a headline that says, oops, like the chief, whatever, president of the country or major, whatever, turns out, right? Enron or whatever, esque kind of thing. So I'm curious how you think about Brazil as a, as a complicating factor.
I embrace it because I've got way too much exposure to North America. And even though I think North America is still like the most attractive place to invest in the world, like too much eggs in one basket. So I'm always looking for opportunities to deploy some money wisely. But outside of the US and diversify geographically and get exposure to younger markets that are less, earlier on a journey I know works because I've seen, digital banking take over in the UK and I've seen e-commerce take over in the UK. And these countries are earlier on that journey, but that's a real journey like that the country is going to go on. And so if I can get a foot in the door with it's unarguable that Nubank are like dominant in Brazil, like they're now, one of the biggest banks in the country, the biggest bank in the country. That seems like a good risk reward bet to me.
Okay, that's a frame.
Let me touch on one or two other.
I appreciate it. Yeah.
Let me just hit sort of one or two other little points. So it's probably worth like exploring the bear case a little bit because like foundational to their growth has been the loans and the expansion of the loan book, like things like credit cards and unsecured loans. Like if we lean into your example of, a developing economy, there is 100% this risk that the loan book kind of gets away from them. Like we've got a picture here from their most recent quarterly results, if you're on the YouTubes, but essentially this is like a story of their kind of like their loan book, like net interest income on the stuff they hold. But the key line to look at here is that it's all sort of weird purpley colours, but it's like the bottom line that's gone from 10.5% to 9.5% in the most recent quarter. So that is the net interest margin. So what that means is, as that number's come down in the last 2 quarters, Nubank is making, like after accounting for losses because people like don't pay their debts and they just kind of forfeit on the debt. After accounting for those losses, looking at the quality of the loan book, this is like essentially like the profitability of the loan book, and that is coming down. So that is something to watch. At the same time, the loan book is growing. So it's like, early in when you start to do this kind of business, for any financial institution, like I guess initially you go after the highest quality customers and you're extending loans to the lower risk customers. But at some point, those good customers, inverted commas, have taken on as much debt as they're comfortable with, because they're probably the ones that pay off the credit card in full every month, if they're responsible. And if you want to keep growing your loan book, because you are making money on your loan book, you've got to then start lending to riskier segments of customers. So it's normal that as you expand the loan book, and Mercado Libre are on the same journey, so are C Limited on the same journey, as they expand the loan book, they're taking on riskier customers. It's the nature of the game. And so their sort of profitability, to keep it really simple, is coming down because the losses are higher on those riskier segments. And then, the tightrope to walk is to, make sure it's profitable growth as you expand. And this could turn around and bite them. Like say the country has goes into a massive recession or something, and like your good customers, suddenly you're in big trouble and they can't meet the bills and they're living like paycheck to paycheck and they start forfeiting on their loans. Well, if you're one of the bigger lenders in a market like that, you could get caught with your pants down. So that is a risk. And I think that is probably playing into the valuation today, because I do think this is a good company, well run, but it's actually quite cheap, like 13 times forward earnings, and it's growing, like portfolio growth 40% year over year. Like that's pretty good numbers. To be honest, that's actually a reasonable entry point if you're starting an investment today. But if you do, it's because the market is a bit wary about this, IMAL moving.
Any wise-esque risks to consider? Like known knowns, known unknowns, unknown unknowns.
Yeah, maybe. Honestly, I don't know much about the strength of the financial regulators in some of these markets, and I can only hazard a guess that it's less mature than certainly in the UK and has some of the strongest regs in the world, but probably less stringent than like most markets. And I feel I said I'd come back to it. It's probably worth touching on it. So Nubank do now have approvals, conditional approval as of January to operate its own federally chartered bank, Nubank NA. I guess that's Nubank North America. They still got to get some approvals from FDIC and the Federal Reserve. But once they get those, which is now just sort of a matter of time, I think, that allows them to take deposits, issue loans, issue credit cards, crypto custody, things like that, under a federal framework in the US, in like North America. And I don't think they're doing that to like compete with like the Chases and the JP Morgans and the Bank of Americas. It's probably more likely to better serve like customers who live across North and Latin America, and to serve that like remittance corridor. People maybe work in North America and sending money home, or they're just kind of like international citizens. So it's probably to better serve like the customer dynamic that they know. But if they did run into like a wise, like, getting dinged for AML and things like that, then yeah, I'm fairly confident that would be painful with North America, even if not in the home market.
All right. So what I'm hearing you say is out with the wise and in with the new.
Yeah, I guess that's what I've done. Yeah.
All right. And your word, though not financial advice, your word in these matters because you are a banking. It's what you understand, and fintech is your sector.
Yeah.
XX, yes, right. Now you're a ski bum. But
I've never
at one point,
yeah, fair.
yes, at one point you used to be an upright a banking class. Now you're a ski bunny. That's a ski badger.
Yeah. Our friends at the Dividend Talk podcast, who by the way are having their 300th episode this week, so I'm going to join in live on Friday. They love to say, so I was never a banker, but I worked for a bank. and I did work at a relatively senior level in financial crime change mitigation. So I know some stuff about this stuff. Yeah. So I do feel informed about Wise. I think I understand Nubank, but like you said, right, my biggest problem with something like Nubank is I ain't there. I can't become a customer. I can barely speak Spanish, let alone read it. I don't know anything about Portuguese. So I got no chance of really understanding the model other than just kind of reading what I read online.
And there you go, folks. You just heard a distilled bear case for Duolingo. Why a 5,000 day street does not translate. Language acquisition. Badge. So we've been going on now for actually a little over our usual length. And it's a little bit of a shame because I have a deep dive prepared for Sphere. You have another deep dive prepared, but I think we're probably going to hold off because it would make the runtime go over way too long. However, I do want to say that I don't know if you know this, but when you invest in Sphere, you're also investing in a cable network. And that cable network just so happens to be the cable network that is screening the current NBA Finals, one of the teams in the NBA Finals, the New York Knicks, which is the team that Monkey grew up watching and rooting for, having grown up in New York City and Jersey. So it is a little curious. It's already going to happen by the time this episode goes out. But the Knicks are in line of potentially winning their first championship since, I believe, the 1970s. So I think they are the most longest suffering team in the NBA at the moment. Quote, fact check me on that. But it's also curious that the President of the United States has said that he wants to go to tonight's game on Monday, which is causing all kind of security hoopla and so forth. Anyway, for any basketball fan, it's a little bit of a probably unknown fact that Sphere and the Knicks are connected financially.
We never talk about sports on this podcast because, frankly, I ain't got a freaking clue. And it's only when you say basketball, I'm like, okay, it's not baseball. Okay, that's what the B is. Okay.
It is a curious thing about you. Your sport team challenged, and yet you do enjoy the individual athleticism of your own bubble, as long as it doesn't have to do with cooperation and teamwork and communication and doing things for the greater good at the cost of your own ambitions. Then you're all for it.
Look, if I can bet on it, then I'll have a temporary motivation. But apart from that, yeah.
All right, so shall we end with a little with our pitch for why we think you should use fiscal AI?
Go for it.
Yeah, because we use fiscal AI. I made a bunch of charts for. I didn't do one this week for Merlin because they're pre-revenue, and so any of the metrics really fall flat when you ain't got no revenue, and you're just tracking software installations on flights. But I did make a really fancy chart for Sphere, which you'll get to see next week when you tune in. You made a really fancy chart for Nubank. We swear by this platform. Yes. Their AI tools have now gotten really fancy. You could see the overview of why the company is a good one or a bad one, the recent headlines, earnings calls, transcripts, and you get to select the KPIs that you want to chart. So really, really useful, our starting place.
Yeah, it's good stuff. I'm a big fan too. If you want to get a nice discount, check out fiscal.ai/wildlife. 2 weeks free, no credit card needed.
Are you, Badge, ready to come back to life from being dead on the side of the whatever forest you were running in?
Yeah, this roadkill is like revitalized and rejuvenated, just like it's Easter. I am ready to become a beast of an investor.
All right. Happy SpaceX IPO week, tall. Ciao.
Stocks just go up.
A reminder that the people on this program may hold positions in the companies that are mentioned. Buying and selling stock carries financial risk, which could include loss of capital. The views in this program should not be taken as personalized advice. Before acting on any of the information provided, listeners are encouraged to consult a financial or tax professional.